Everybody can hear? Not just now, my mic was giving some problems. Alright. Hello all. My name is Barry. I am a moderator at awesomecalls.com. There we go. Alright, so it's all working. There we go. Welcome all to our webinar. Today I want to go over some psychology of trading. I think a lot of people, good. I think a lot of people have a lot of issues with. I'm not really going to do a lot of charts today. I think I just want to talk to you guys more. A lot of people are having issues because I get a lot of emails, a lot of messages about psychology of trading and how it affects your entries, exits, your threshold for. Can I blow up the screen? Sure. Um, Wait. There we go. Okay. Um, all right. Anyways, so a lot of people email me constantly about psychology of trading, about what I see, what I don't see, why I take a trade. Um, no worries. See better now? Okay. So, I just wanted to go over some of that because I think there's a lot of issues with a lot of traders, new traders, old traders that have I haven't been trading that long. I mean I couldn't say okay, well, it's because of my years and years of experience of trading. It's only been a couple years now that I've actually been really into trading. I played with stuff before, more like swings, and never really got the gist of it. But after, like, for the last 2 years, I've been kind of serious more about it. Um, but so there's a lot of people that email me about how to prepare, for trading. What's my strategy? Do I have a plan? Does greed, fear, certain emotions affect my trading? And so I always tell them that you gotta have a strategy, and there's a lot of people that don't have a strategy that want to trade, and they get up every day and they see something that's moving, or they see somebody that's saying something on Twitter or whatever, that something's going up or down, and that's how they trade. So they don't really have a strategy or a plan when they come into trade. And you gotta have a strategy. I mean, you gotta have an idea of what you want to do and where you want to go. I also asked a lot of people to email me questions that they want to go over, and there were quite a few of you guys that did ask about entries and exits, and a lot of people asked about chasing trades, fear of losing money, because it seems like a lot of people, obviously, there are a lot of traders out there, and people think, especially new traders, they think that you you start trading, you open up an account, and you start trading, and automatically you start making money, and that's just a real big bad misconception of the whole market world, because it just doesn't work like that. A lot of people also, they see other traders with fancy things and houses and cars, and they wanna watch a 2 hour video and become a great trader, and just that's just not gonna happen. You're probably more than 90% gonna end up losing all your money if that's your only way of getting your information. So it's the psychology basically just ends up being a lot of having a strategy, having a plan, and the discipline to execute that plan. So if you, yeah, well, that's like, yeah, 55K P&L. That's just good stuff right there. But he's lost a lot too, Alex. So I know that guy. Um, he's actually just making that back up now. But so a lot of people having issues with entries and exits. For me, I do a lot of candle patterns as far as getting into stuff, and obviously you guys know I love my lines, right? I love my horizontal lines, and I do a lot of trend lines also. So I do a lot of patterns, a lot of formations. When I enter a trade, there's always a risk, obviously, because if you enter a trade and somebody tells you that it's gonna be green as soon as you get it, then they're just lying to you. Most, you know what? Not, yeah, I would say most trades that you enter, I think I can confidently say most trades that you enter end up going red on you for the first few minutes of having it if you're a day trader, and and then it settles itself out unless you nail the exact reversal point. um, then it goes red on you for a little bit, then you have your patience, your strategies, your stops, all that set in, and you minimize your risk with your stops, and you play your formations based on the knowledge that you have, and it should go the way that you want it to. Does it always? No. I mean, does all formations happen the way that you want? No. So you can't really put your entire, like, say you wanted how should I put this? A lot of people think that, okay, you jump into a trade and you should dump all your money into it or all your buying power right into it and expect it to go because that formation was there. And it could be a perfect formation, it could be a perfect flag formation or channel formation, it could be a perfect candle formation, whatever it is. And they don't use a stop, or they use a stop that just doesn't make sense. If you get into a stock, um, I mean, I'll try to show an example somewhere. But if you get into a stock at like $10, you can't just say, okay, I wanna risk 50 cents. You have to say, well, what's the reason that I wanna risk 50 cents? You have to say, your stops could be at 48 cents. That could have been the low of day or something, and then your stops would be at 50, and you'd get stopped out. So you can't get into a trade and just say, okay, well, for example, say this stock. You can't just get in at 104 here and say, okay, well, I'm gonna put a dollar stop. You have to know why you want to put a dollar stop. Like, where would you where would your risk make sense? Because sometimes a range in a stock and the stops that you have to use doesn't make sense. Sometimes ranges in stocks are too small, where a lot of people jump into a smaller stock because it's a dollar something, but the range is only 3 or 4 cents, and the stock goes up 3 or 4 cents, but that's the range. So it limits the amount of money that you can make, and it's not really a feasible thing. So you can buy, 10,000 shares of that stock, and yeah, because it's a dollar something, but it's not really making sense for you to make money. I mean, I don't scalp for 2 or 3 pennies. You guys know that, and that's not what we're about. So we try to look for stocks with more range, so that way you can get more benefit out of it. When playing reversals, do you find yourself looking at price support? Yeah. Okay. Let's say we were doing this. This is Yang. This thing ran a whole shitload today. Obviously, it's a bear ETF from China. Chinese market's been in the shits. So let's look at this. If we were doing a pattern, it would fall somewhere right there. Okay. Let me just kind of blow this up a little bit. I'll bring it over. Okay, the red line right there. Red line would be a flag. Okay, now looking at this now, obviously hindsight is great, and that's a perfect reversal right off the flag, and then it goes, sky high. So hindsight trading, we'd all be millionaires, but it's not hindsight. So here's how you work this. You get up in the morning, this thing's gapping up. Obviously, you didn't have this because you didn't have this down here the day before. So you wish you had it, but you didn't. So you get up in the morning, you see all this going on here, and you don't buy up here, obviously, unless you're trying to short it. But the risk over here is high because it already gapped up so much that you don't know if it can pop another 10 points on you. So you just relax on this one. And then during pre-market, you see it came up to here, and then it came up to here. Even if you didn't have this line here, you kind of see, you can visually see a little formation going on there, right? So you do end up putting a line in, and this is not going to be exact. This could have been up to this point. This could have been up to this point. It just still gives you a basic idea of where the channel is heading. So now you know that now this is a, where's this thing at? This one. Okay, so you know now that this is the pole and that's the flag. And so you're looking, you have no idea. Okay, let's picture it at like this time. So you have no idea what's going on past this time, right? So you're following this trend line down. You're also watching, this is how I use my moving averages. You're watching this moving average here, this gray moving average, which is my 200. Um, so I'm watching this over here as an area for me to try to get in to see when this reversal is gonna happen. So I see it come down over here, and it's not holding. But for me, this is an area where I'm looking at that I want to buy. Even though even though it's still in this downtrend and it's broken this uptrend to the downside, it's still an area for me that I'm looking at as support. Now, why would you say that I'm looking at this area for support? Because I do, the moving averages do hold a lot of strength for me. And so this is one moving average here that I would consider as a stronghold. You would have smaller moving averages, your 50 and your 20s and whatever, but this is more of a solid moving average, a 200, especially on a big mover or a big chart. These these types of moving averages are the ones that you want to look at. So I would have probably been looking to get in right here, anywhere that it's around this 200 for me if I wanted to go long on this play. Let me see if I can try to bring it up a little bit bigger. So I would have gotten in, just say I got in here, right there, right off the, let's try to make that bigger. Holy crap. Okay, edit. Alright, so I would have gotten in right there, somewhere around here, just saying I was playing this. Now, I don't know what's going on here or anything, because I haven't seen that, obviously, right? So that's the market that's just moving, and I got in here. Now, my overall risk would be down here, because we know that this was the bottom that it was at. Now, when I say overall risk being down here, I don't mean, okay, that low obviously was at like 98.09. I'm not going to put my stop at 98.09 just in case it double bottoms and then it moves again. I would put my stop lower than that, and therefore, if it broke through the point over here that I expect to hold support, if it breaks through that, then I don't want it anymore anyways. So I'm out of that trade over here if it got down to this area. But as you can see, if I had gotten in over here, it would come down here and not even get down to this double bottom, so I would still not be stopped out. Then I would still have this trend line over here drawn on my chart. So it comes above the trend line. That's when I'd really start to be okay with this trade, being that the price came down, formed a pretty much a double bottom here, and then came back above the downtrend line. then I would be okay with this trade. Where I would be really happy with this trade is when I start seeing these moving averages converging over here, and then I get this over here with the 50s over the 200, and then I'm really happy about this trade over here. So at this point, once it comes over my, obviously I go red and then I'm green, so I'm okay with it yet. Stops are still down here. I haven't moved my stops because this is still the risk that I want to play. So once the price comes over back over the 200 and this intersection right here happens, then I'm a lot happier with this trade. And now I use this 200 moving average as my stop. And obviously I don't put it directly on it. I put it underneath it. So obviously I'll be putting my stop. Let's say I put my stop here. Yeah, I use the 200 a lot off of big trades. So this is my entry right here. I'll put a line right where my entry is over here. Okay, so that yellow line there is my entry. And then my stop is going to be under the 200. So it's going to be somewhere around here. So it's going to be still in the money because I'm above now. And then I'm just going to walk this up as far as it would let me go. Now this chart, I have no idea where it actually went to, but it's kind of was, it was saying, hey, this is kind of where I want to go. And let's see. Okay, so it did end up going all the way up there. See that blue line? So it did end up going all the way up there. So it was kind of telling you from this area over here. I can delete some of this crap so you guys don't get confused. Remember, this yellow line was my entry. This was my holy shit stop right here. And now I'm using this moving average here now as my stop, and I'm walking it up as it goes along. Now, as you can see, there are formations happening all around here. There's channels. See this? This is the channel that it's in here. Broke the channel to the downside, but I'm still using my moving average as my stop. Still obviously in the money. And no matter if I sold half or whatever, it doesn't really matter if you sold any or anything as of yet. If you were to add, obviously you would add on these strong points where the 200 is, because obviously you see that the 200 area over here was not really, it didn't really hold obviously, but it was in the general area. So you know that the 200 is something you already are looking at. Um, yeah, that's my holy shit stop. That's the holy shit. I can't believe it went down there. Um, so now you're using this 200 as your stops. You're walking it up. You're walking it up. As it starts to get further away from the 200 is when I start tightening up my stops. My stops are no longer all the way down here if the price is all the way up here. My stops are all the way up here. Why am I putting my stops closer now? Because the further away it gets from the further away the price gets from the moving average that you're looking at, the more likely that it's going to come back and retest it. Like there. So just remember that the further away it gets from that moving average, the more likely that price is going to come back and retest it. So as this goes up here, my stops are moving up, 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 and I'll probably end up getting stopped out somewhere around here, because it would have obviously gone up and then come back down, and I wouldn't have sold here because whatever. So I would have gotten stopped out somewhere on here because I would have had stops moving up along this line, and it would have gotten stopped out here. So that's how I would have played this. So once it starts pulling away from the moving average, just keep this in mind. Once it starts pulling away from that, you're already thinking, okay, well, it's not parabolic or nothing, so, but it's too much, too fast, so it's gonna pull back. So that's how I play my price off a moving average. When it starts to separate too much, I'm already thinking, okay, I want to get out of this. When it's tight on it, you kind of follow the whole trend along. And once it starts to separate itself from the average, you start tightening up your stops because the more likely that it goes away from the average is the more likely that it's going to want to come back and test it. So it's already tested there. But this is an ETF, so don't think it's just so easy to read. This one's just easier to read. Um, intraday for now, especially with all that China stuff going on. What point do I add to my position? Max, what's up? Okay. This is the channel. This is my entry here, this little blue thing here. Um, if I went red, I'm pretty much happy here. I haven't really added yet. Why I haven't added yet over here, why I didn't add anything over here, is because I'm already red in this position, and I'm not really 100% about this yet because it actually didn't actually test it. For me, it's a big thing if a price doesn't come back and test it almost to the penny, which is it's a big thing for me mentally. It makes me feel like it's not strong enough, like the bounce wasn't strong enough. Um, and even if you look down here, the volume for this bounce wasn't a lot. The volume was really, really shitty. So for me, I would think, okay, well, maybe this wasn't a strong move. I would have been wrong, obviously, because the move never came back down here. So I would not have added down here, only because of this bounce here off of this double bottom pattern was not enough volume for me. It was 2600 at this point right here. That could have just been some guy with some money in his hands. Not a big reason for me to say, okay, well, this is for sure a strong point. If this area here had a candle like this, like this sort of candle, I would say, okay, well, there are buyers stepping in, and then I can trust on their strength that I can add over here. So I didn't add, right? So it came back above. Now my trade is green. If I was to add, it would be along this line here, anywhere close to the 200 moving average. I would be adding, and then I would probably stop adding at a certain point. Um, Even when it broke this high over here, right there. I mean, I can X off all this crap if you guys are getting confused. But you can see constant patterns of flags all over. I mean, there's one there, and even if before that price got to this action, there was one here. So it would pop there, it would come back down. This area here would be your support still. Remember, this is still your support area, your 200. So anywhere in between of this pattern, as soon as it breaks above this little flag, and it still maintains this support here, you can add. I can X off all this. There we go. So your adds would be above a strong support. You just can't add anywhere. You just can't. A lot of people would add up here. A lot of people would add here or add here. And there's no reason for that. You have to have a reason for everything. Remember, you got to have a strategy, and you got to be disciplined enough to say that I'm going to stick to my strategy. So what's your strategy? If your strategy is the flag, or if your strategy is a breakout, then you wait for that. You don't do add here or add here. You remember what I tell you guys. If you're long, you're selling into big green candles. You're not buying into big green candles. So if you're doing an ad and you're looking for formations, then you look for the bottom of the formation, and then you look for a breakout off that formation. That's when you add. You add on the confirmation when it comes above. But remember, you were already green from all the way back here or wherever, somewhere here. So you're already green. So when you add now, you add into an already green position. That means that your average from here at 99, if you added up here at 100, your average just became like 99.50, right? So now your stops have to be above that in order to maintain a green trade. So you never let a green trade go red on you, even if you have to take even money. Well, you buy the dips, but you got to have a reason for buying the dip. Now, this dip could have just kept dipping, right? This whole pattern could have come back down to here. So it's not just about buying the dips, because people say buy the dips. Okay, where's the bottom of the dip? There's a valley, but where's the bottom of the valley? So people say, okay, buy the dips. Everybody said, buy the dips, buy the dips. Where's the freaking bottom of the dip? How do you know where the bottom of the dip is? You gotta know patterns. You got to know where your supports are. You got to know where your strengths are for the chart. So this 200 right here as my moving average, that's my strength for this chart. The 50s is another strong one. So you got to like, a lot of people say buy the dips, and I totally understand that. Buy the dips, obviously, it's a good chart over here. So you want to buy the dips. But where's the bottom? Ultimately, this is the bottom. Ultimately, this is the bottom, right? Ultimately did not happen after this second bounce. So, somebody's telling you buy the dips. Buy the dips. We got to figure out where's the bottom of the valley in order to buy the dips. You can't just go buying dips because what if this dipped down here and you bought more down here? This is a dip, right? So what if you bought here? And you're like, oh, well, I'm buying the dips. Well, how did you know to buy here? What's your reasoning for buying here? You want to buy more? Fine. Everybody wants you to buy more because the chart's going up, right? Well, how did you know to buy here? How did you not know that that price was going to come back to retest down here? So, you got to have a reason for buying the dips, right? So just remember that. Obviously, on a long play and you're green, when you do buy the dips, you also have to really quickly think about the risk that you're taking if you do buy the dips. If you have a $10 stock and you buy and I don't know. Okay, you have a $10. Let's just use, okay, fine. Let's use this one. Sorry, let's use this one. So you bought here, right, off this 200 strength. So you bought at 99. Now you're trying to buy the dips over here. When you do buy the dips, you got to remember that your average is going up. If you buy the same amount, your average is cut in half. So if you bought at 99 and then you bought at 100, your average now is 99.50. So now your risk has to be above 99.50 in order for your trade to stay green. Because if why would you buy here, then buy the dip here and put your risk lower than 99.50? That would make no sense. That would make your green trade go red for no reason. So if you are buying the dip and if you are averaging up, you have to make sure that you're averaging up for the better, not for the worse. Because sometimes just having a low average on a smaller size and staying strong with the trade is better than buying the dips, raising your average, and end up screwing yourself over because now your average got way too high and because you bought up here, right? You bought up here thinking, okay, well this chart's just gonna go crazy, and so if you were following this little formation here, right? This little channel here, so you bought a shitload over here, and now your average went all the way up here from down here. So in um yeah, I always look at the big market. I mean, if you look at my chart, this is my Dow Jones here. And this is my UVXY because it's she's back in business, so I upgraded her back to main side chart because once I'm back in the room, that's gonna be my focus again, Neil and UVXY. You guys know I like that girl. So this is my Dow Jones here that I'm constantly watching every minute of the day when I'm trading because I have to know what's going on. If something like this happens, like a big drop like that, then you know obviously that the big boy stocks, ESPR, AGIO, Blue, the kind of stuff that we usually play, you know that they're also pulling with the market. So the market obviously is affected by, I'm sorry, a lot of stocks are obviously affected by the general market. So that's why I keep an eye on it. I mean, a lot of people don't trade like that. A lot of people just trade patterns. A lot of people trade fundamentals. A lot of people just, read weeks and weeks and weeks of stuff about the company and how much they love the company and whatever. I don't read that stuff. I don't care. I don't care what you do. I'm sorry to say, but I really don't give a shit what you do. I just, as long as you have a good pattern and you got momentum and you can make me money, that's pretty much all I want to do. I'm not sitting here saying, I love this company because they got a cure for this. Real nobody really cares that they have a cure for this. If any trader sits there and says, "Yes, I'm really happy that this company is finding a cure for this, and that's why I want to invest my money," they're just full of shit because nobody really cares. I mean, it's great for them, right? It's great for the CEOs that are making, 4 or 5 million dollars a year or whatever. But for us, we're just day traders. We're just trading this stuff here, candles, and this is all we're looking at here, the little dollar signs. So, anyways, so back to the psychology. I think we got through some of that, right? So the psychology basically just have a plan and stick to it. Stick to it. Just keep remembering to stick to it. If your plan fails, that's where your discipline's going to come in to save you. And your discipline is going to be your stops. Your discipline is going to say, okay, well, if I bought this, I don't care what stock. What is this? JDST. Okay, I don't care if you bought it up here and you said, okay, well, I'm gonna be disciplined enough to say, well, sorry, well, this is my stop, right? Obviously, remember what I say about stops. You don't have it exactly at that. So that line would have been like a 28. You're not gonna have your stop at 26. That's just 2 pennies. So you would probably have your stop down here at 20, 15, somewhere around here, just to give yourself some room, and you'd end up banking on this one. You'd end up banking nice on this one. Um, but just saying that you have to have a strategy, saying, okay, well, a certain formation is working a certain way or whatever, and a certain stop is going to protect my account from blowing up. Now, you gotta have discipline because they go hand in hand with your strategy. Not all strategies are gonna work. Not all traders are banking money consistently. I mean, a lot of people think that that every trader out there with a Twitter account, over 10K or something, they're banking money every single day, and they're not. People have bad days, people have bad weeks, some people take months off just to kind of get their stuff together. Not every trader has green days consecutively every single day. When you say stops, uh, no, no, no. I put hard stops. My holy shit stops are hard stops. My holy shit stops are hard stops. They're the stops that's gonna save your account. If I risked, say I was an idiot somehow and I bought this thing over here at 1050, and if I had a mental stops, it would be down here or whatever. But my hard holy shit stop would be under that yellow line right there. So that would, just in case I got into this stock over here. Now, for some reason, obviously, I wouldn't get into this trade here, even though it broke this high here. I would need some sort of confirmation before I got into this trade. I wouldn't have gotten into this trade here. But just say I did. Just say I got into this trade at 1050 at the high of the day or whatever. At this point of the day, I'm not looking at the past. This is only like, what, 10:45 in the morning. So I got in here. This is my holy shit stop under this yellow line. Under that yellow line is my holy shit stop. That's got to be your risk down there. So I bought it here, and then you got to risk all the way till down here somewhere. So that would be my hard stop. That would be my, okay, if I put 1,000 shares in here at 1050, I'm gonna risk it all the way down here to 9. What is this? $10 would be there. Yeah, I would probably do like 985 or something. I would have to risk that amount if I got into a trade like that. I mean, that would be a mistake trade though, because I would never get into a position like that. Even though it broke here, if you played a pattern like the patterns I play and the way that I play patterns, even if it broke high of day over here, that yellow line. Let me just delete this other one. Even if it broke here, it would need to retest and hold for me to go long. And obviously it didn't. It retested and pulled through. So this wouldn't even be something that I would play. This would be the high of day. That would be there. Right? It didn't hold here for me. I wouldn't even play this. So I wouldn't be caught in this situation where I would have to risk all the way down here. But just saying. That's where my hard stops would be. You have to have hard stops, Max. I mean, mental stops are great, but if you're, it, I know it works out sometimes. I know things turn sometimes, and you end up banking on a trade even though you went crazy red on it. But sometimes the best thing to do is to cut the loss. Not sometimes, sorry. Most times the best thing to do is cut the smaller loss and re-enter at a lower price rather than to hold a big loss for weeks or months or days or whatever the case is for it to turn around. What indicators do you use that are at the bottom of my chart? Stochastics and volume and MACD. It's the MACD, stochastics, and that's just volume bars. So volume, MACD, stochastics, and I have like what is it called, convergence or divergence or something thing over here. This little pink bars over here. It really doesn't do anything. It just kind of looks cool. Um, Yeah, discipline's definitely everything. So that's my psychology part of it. I think you gotta have a plan, you gotta stick to it no matter what. Even if you're gonna lose money on a trade, take the little loss and move on and come back to it because you can always come back to it. Don't get scared of losing a trade and or two trades or even three trades. Don't be scared of losing a couple trades and say okay, well, I've failed, because it's just a matter of finding a strategy that works and using that strategy to the best of your ability and making it work. I mean, so you bought something and it broke a pattern and you got stopped out, that's okay, you move on again. I mean, even if you bought here and you got stopped out here, then you said okay, fine, that's my loss, whatever, I'll take it. And then you're still stuck on this particular trade. So you looked at another pattern and then you go, okay, well, this is another flag, right? So let me play this breakout here. And then so you played the breakout and it retested that breakout line and then you actually made money on the trade. But you would have gotten stopped out obviously again over here, but hopefully you would have probably been scared from this trying to make back your 20 or 30 cents that you would have probably sold for 20 or 30 cents just to say, I made my money back. So 200 SMA EM, yeah, I don't know. I never really figured out what I use. Okay, so here are my settings. Um, SMA 20, 200, 50, and 8. So it's 20, well, let's start from the beginning. 8, 200, 50, and 200. Whoa, did I just mix that up? Whatever, you guys got the idea. Uh, yeah, so that's the averages. I don't stick like my averages aren't gods, so that's why I barely sometimes it's like I can't even remember which one I use. They're not gods to me. They're a guideline to a pattern, and they're just a tool. I can take all of this stuff off, and I would still be able to see a pattern. I mean, it'd probably be clearer to me if I didn't have this stuff now. I use these a lot more for a main support or for a range of reversal or whatever, but they're not gods to me. So I I won't say okay, well, I won't take a trade if it's not above the 50, or I won't take a trade if it's not, if they're not crossing, or if the 50 is not over the 100 or whatever. I won't say that ever. I'll play patterns. Do I ever get out of a stop before it hits my stop? Yeah, it depends on the strength that it's going down on. If I'm long in a trade and I see that it didn't hit my stop, it didn't hit my holy shit stop or whatever. But say this just kept breaking and say this broke this MA. Now this is where I would use the MA as a reference. Now if it broke the MA down here and then retested the bottom of it, so, like, it would be like this, right? Say it came down like that, and then obviously it popped because this is what happens when something comes down drastically. If it pops, and then it hits that 200 right there, and it never goes above it, then it's gonna eventually come back down. And that's a horrible arrow. That's when I would get out before even it hit my holy shit stop, because once it goes down past this area of mental support for me and then it retests it from the underside but does not break through, here, wherever that last point is where I'm gonna get out of this one. I'm gonna say, hey, that's enough for me. I don't need it to go all the way down here. I don't need to see all my reds here. I can see that, okay, I want to get out. Once it breaks here, retests it, I want to get out at this area if it breaks again. And so I would have gotten out here at that area. Okay, you understand? Uh, Yeah, my horizontal lines are previous closes, opens, highs, lows, previous. Yes, my horizontal lines are previous highs, previous lows, previous close, and I don't do opens. No, I just do high, low, close. High, low, close. I used to do open, and then I had too much stuff on there, so I stopped the open. 'Cause the open, I'm really not playing the open for my intraday. I'm really only gonna be using that for other purposes. But like during the day, I'm only playing my high, low, and close. What is he looking at? Fit. Okay, so fit. See, I have been not around for a few days, so I can't really say what this chart's looking like. But if I did the daily, right off the bat, you're looking at shit, that area right there. Because this is the first 2 days of the IPO, and these are the first two candles that I put in. So this is what the stock's gonna kind of say. Okay, well this is kind of the pattern that I want to have. Um, Give me one sec. If my lines would move, it'd be great. I would need to find an area where there's more support. This chart just doesn't have enough areas for me yet. But this is kind of the channel that you got going here. So you would be using an area over here as support for this flag over here. So you see the flag, right? It's the pole. And now this is the consolidation period. You're looking for this area here to hold. If it gaps up over here, it already kind of tested it. So this could have been the reversal in formation already. So that it could just keep going further up. I have no idea where it closed or anything. I don't care. Just as far as the chart goes, this is the consolidation area here, and it did kind of retest the highs, this resistance area here. It just kind of tested over here as support, so the chart could actually go up. And being that the markets were so much down today, and the market's at an interesting point there for me. I was kind of looking at it earlier. I think it's gonna go up a little bit tomorrow morning, and then it's eventually gonna. There's gonna be a bigger dip coming, but that's just my thought. Yeah, find making notes is helpful. You know what? Making notes on good trades. Well, how the hell are you gonna know if it's a good trade or a bad trade when you start it anyways, right? Um, but making notes as far as why you got into a trade can show you um like over a little period of time how you should be trading. Say like, well, I can't use this as a reference. 'Cause this is just, I probably use the daily though. Sorry, let's use a 5 Monday. Alright, let's use today on this fit. Chart's kind of sketchy. Um, okay. If you're looking at this, obviously you don't know any of this, right? So let's push this away. Push that away. Okay. You came in, you opened up your platform, you saw this down here, so you know that's a line. That's a point that you want to use. Now this candle opens up here and it intersects there. So once this other candle used, now you have this line here to work with, right? So you're using this line here as some sort of a reference for now, because you don't have any other, you don't have any other idea of what's gonna happen behind here. So the day progresses, and let's see. Okay. So your day progresses and it comes down to almost this area here. So if you wanted to go long and you wanted to start scaling in, this would be the area here. Your stops would your holy shit stop would be down here, but you really it's too wide. It's too wide. I wouldn't even advise having a stop that wide. I'd rather you get out if the trade broke. If the trade broke the line up here, I'd say get out, anywhere around this area over here. So you're watching this. Yeah, can't do this. You're watching this line here. So you're scaling in long over here, hoping that this line holds, and these are your stops down here. Obviously, your ultimate stop would be down here, but you're not thinking about this. I don't care what the range is right now. But you're not thinking this far down. This is just too much to watch your trade go down from here. So you're following this pattern here, and this trade over here now is your stop because that's your trend that you want this to hold. So you're kind of playing with this one all the way through. So say you did luck out and you scaled in over here, then you got this pop over here. Now you're looking at this over here thinking it's obviously a bull flag formation. Now you can see a perfect flag formation that fails. I mean, perfect up, I mean, you see it. Perfect there, perfect there, perfect flag that fails. So, now when you got in here or whatever, and you're up here and you're still holding it because this is obviously consolidating. It did it over here and then it popped, so it's doing it over here. You would obviously think that it's gonna pop because this is a perfect formation. You would expect it to end up somewhere around here. So you'd be using this line over here now. You would be maybe you saw that much of the trade. Okay, so picture you saw that much of the trade. I'll delete that. So picture that's where the time is at right now. So you don't know whatever happened other than that. Okay. So this area over here. Why am I choosing this area? Because of this point over here, and because of this point over here, and I'm pretty sure it was the close of the day over here. I'm not exactly sure. I'm pretty sure it was pretty close. Right, so now using this area over here as your support because it was a resistance prior to that. Once it breaks that, you're out. You're out of this trade. Screw it. Whatever. You got in here. You may have sold some during here. You're holding half, whatever. Even if you didn't sell one share, you got in here. And you're holding all of it still. If you bought 1,000 shares, you're holding all of it still, thinking, okay, this thing's got a perfect formation. It's gonna break to the upside. This is your stop, right under here somewhere, which happens to be on the trend line. See that those two lines intersect right there? Just happened to be that way, because this was the trend that it was holding. So now this is the actual initial trend that's broken here. Your stops here. You're out of this trade. You still pick up this amount of whatever this range is here. That's the amount that you still go home with. So that's how you would play it as far as stops and everything. Got it? Yes. No. Okay. Um. Okay. So I did entries, exits. I did some of the psychology. Guys, there's a lot of stuff on psychology of trading. It's not really something that's new. I'm not, I just didn't like discover this. This is nothing that I discovered. Sorry. It's nothing that I discovered. I mean, you just if you Google psychology of trading, you'll come up with tons and tons of books and videos and magazines and whatever. I mean, so there this isn't something new. Psychology of trading isn't something that I just, decided to do a webinar on. I think it's just very important for traders to understand that you got to have a strategy and you got to stick to it no matter what. No matter what. You stick to your losses, you take your loss, you move on from there, and then you bank on something else with the same strategy. Strategies are gonna fail on you, maybe. Okay, say they fail on you 25% of the time, you still have a winning strategy 75% of the time. So the failed strategies, you take a few, you take a couple a little loss on that, like I don't know even what percent loss you would take, but it would vary obviously. But you would take a minimal loss because you would have tighter stops, right? And then the ones that run, you can bank a lot of money on it. So having a strategy that works and being disciplined enough to keep your strategies intact is what's going to save your account in the long run and what's gonna make you a more consistent trader. Now, a lot of people think consistent traders are a trader that walks into a room and banks every single day. Not so. I mean, I take losses all the time, but I minimize my losses. Like, just say I was playing this little formation here, and I just got in, and I was like, okay, well, I want to play this little triangle right here. This little triangle. Okay, so I got something here right as soon as not when it broke, but when it retested. Okay, so I got some here, and I got in and I sold some. I mean, so then this would be a winning trade. But then you would get in here, say I got in at this period of the day, thinking, whoa, okay, this broke out, flag. This broke out. Look, we're waiting for a breakout. So then me, I get in over here somewhere thinking that it's gonna go long because this is not a it's not a stupid thing to think this is gonna go long, by the way. It's not stupid to think that this is gonna go long. So I got in here and then this happens on me. So, it was a good plan, right? It was a good plan, but it fails. So I do take losses all the time. I mean, but I minimize loss. So even if I was playing this little flag, I'll X all this junk out. Even if I came in at this point of the day and I said, this is the little flag that I want to play right now. That's not the right one. You gotta pick this one here. There. Okay. So I walked in and I saw this little pattern happening here and I said, whoa, what do you know? This thing's gonna pop. So I come in and I buy a bunch over here and then it pulls and it holds this 50, so I'm still okay with it. I didn't buy any more yet because I want to see if it breaks the 50. So it comes up here and now it pokes through to the upside. So now I'm super happy thinking, okay, well this chart's definitely gonna rock out now. But it doesn't. It pops right to the downtrend and then it fails. And then I get stopped out somewhere here. So I lose, but I minimize my risk. Okay? So just try to minimize your risk. That's gonna keep you in the game for a while. Do I include after hours pre-market? You know what? Sometimes I don't because after hours and pre-market, sometimes you'll see like one idiot that buys all the way up here, and it'll be like 4 shares or like 100 shares, and it'll be a here. So then using that as a reference would screw up all your charts. So no, I don't do all of them like that. I do on my side charts or whatever. I haven't even updated any of my side charts, man. I mean, like my stuff's just all over the place. I was looking at some of my stuff today, and my lines are all over because I haven't updated anything in a long while. I mean, like, this is my cyber side chart, and like this is how old my lines are. But obviously, you see, they're still in effect. But that's how small my side charts are. Because I don't need them to be big. I just need to get the general. I only look for these things here, my lines, and wherever the thing is. I don't care what the candle pattern is, as long as it gets close there, then I'll bring it up on big screen. Um, but some of the stuff, yeah, I got a lot of catching up to do. You know what I said I was gonna? I said I was gonna, like, this is my GoPro one, sorry. And obviously the lines are still holding true. And I mean, what? It's been, look, that one to the penny, that one a couple pennies off. So the lines are still holding true. So it goes to say that obviously they mean something. So it's just lines, yeah. But okay, forget the lines. They're closes and highs and lows. And no, I don't like using the pre and after because of the same thing that I just said. Some idiot buys 100 shares and then it pops it all the way up here, and it really doesn't help to show an actual chart. What if the volume was high? Yeah, yeah. If it was a mover, if it was a mover after hours or something, then yes, I will use it as a reference. But I won't put it in my permanent charts. It would not be in my side charts as a permanent thing. It'll be used for a day trade type deal. Like it would be based on a formation or flag or something. I'm really into flags a lot. Well, you can't be greedy, but you also, and I think I was telling somebody this today actually. Being greedy is one, but knowing where your stops should be is gonna develop a trade that you could have made $50 on. I'm using a very small number. A trade that you could have made $50 on, and to a trade that could have made you $150 on. So knowing when to be greedy is also a good thing. And I'm not saying greedy in a bad way, but knowing when to be greedy in an uptrend, knowing when to be greedy using your stops. Once your stops are in your money, you're still it's a free trade. Always remember that. Whatever how many ever shares you have, once it's green and your stops are above that entry position, your trade has now become a free ride. I mean, you can have 10,000 shares of something at 50 cents, and once your stops are at 51, no matter what happens, you're green. You're safe. That's almost like somebody gave you a free pass to something. It's like there's no risk at all in this trade from here on out because my stop's gonna protect me one penny above what I actually paid for it. So there's no way in hell that you're going to, go home red. So, I mean, sometimes you gotta be greedy, but not in a bad way, in a good way. You gotta know when to be greedy for a good reason. I mean, look at this bear one today. Okay, so it gapped up, right? First candle popped, so then you short it right over here, and then you'd get out over here somewhere because obviously you'd see the little reversal happens, and you get out. So because that's a big drop, it's like a 3 point drop. So I'm sure you would take some money here. But then okay, you're saying don't be greedy, right? So say you lucked out and you figured that hey, this is a double bottom area here. And when it came back here and it held for support, you said you went long, right? So say you went long somewhere. Say you were me, you wouldn't even go long right at the double bottom. You would go long here after this breakout. So say you went long over here, and then you're like, okay, well, I don't want to be greedy, so I'm still gonna get out over here. But in this case, if you play it properly, being greedy obviously is gonna help you. So you focus now on this trade because obviously you have money invested into it, and you do all your lines or formations or channels or whatever you use or whatever you want to use to help guide you along. You use the moving average, use whatever tool you have to use to be greedy in a good way. Not in a bad way when it's going down and oh, I was greedy and it came and it went red. It should never go red on you. It should always your once you're green, your utmost stop should be at your entry right there. Cause once you're green, you should not go red. If you go red, then there's always a lower entry that you can get into. So get out, free ride, get out, and then jump back in later on if you're so headstrong on that chart. So once you're here, then you look at these patterns and you're like, okay, well, this looks like a flag, and then this looks like an uptrend. So let me just put my stop here under this 50 because it seems like it's holding. And so you have your stops here and you're holding it and and it goes on you. And so being greedy in this point here, not greedy in a sense where I'm guessing greedy, but greedy in a sense where I'm technically being greedy. You understand the difference there? So sometimes it's good to be greedy, but you have to have a technical reason to be greedy. You can't just say, "Well, this chart's just gonna go to $300 today." It's just stupid, You can't just say stuff like that. Do I trade with the five? No, my side charts are all in the five. Um, my side charts are all in the 5 minutes, like you can see it there, like 5 minutes one day. Um, but my intraday chart is always on the 1 minute, and then I'll shrink it. I'll shrink it up because I want to see. I'm a big candle guy, so I want to see candles. I want to see, haramis, and I want to see dojis, and I want to see tops, and I want to see hammers. You know, I want to see shooting stars. I want to see hammers. That's just me. I'm a big engulfing. I'm a big candles trader. So I incorporate a lot of things, guys. I mean, like, there's not one thing that I don't cover. I think I don't do a lot of fundamentals, honestly. I'm more of a technical trader, and I don't do a lot of fundamentals. I mean, I hate reading a bunch of junk. I don't care about what the company does. If this is a pattern that's working for me, I'm with it. And that's all I'm here for. I'm here for this, and if it's a good swing, I'm in there, and the swing works the same way. So let's do a daily on this, which is very hard to see. But if you were to, this is sketchy because how does the stock trades in a sketchy kind of way. Um, if you were to draw a pattern, a downtrend pattern, and just say you were looking at this thing for months on end or whatever as a swing, you would form the same sort of thing. You would look for a downtrend and you'd look for a break of the trend and a hold of it. Then you would probably look for something that's stronger, maybe like a 50 or 200, which is usually far off on a stock that's beaten down. You'll always see your 200s up here, your 50s over here. So once this starts going and you start seeing that curl in action going on right there, you want to try to swing some of that risking down here as your ultimate stop, risking down at the bottom there. So you can kind of see if you were swinging this, right? This is a swing trade. You would see that you would have a line there being your ultimate stops as you go along here, and then you would look for a positive break, which for me would be on this day here, right there. That would be my day when I would get in. Whatever, I can't tell you the exact number, but that would be the day I would get in. Why is it that I would get in on this day if I was swinging this? I can explain that clearly. If you follow me a lot, you know that I do a lot of candles. Um, this would be the downtrend line, the ultimate downtrend line. This day here would be the break of the downtrend line. Also the break of my trigger, which is the 8 SMA over here. So now being that it broke the downtrend and broke through my trigger line is great for me. Now this is on my radar. So what I'm looking for now is a gap up or a retest of my trigger line, and then I'm going long. So it gapped up there, that would be my trigger to go long. Remember, this would be a swing trade, so having, 10 cent, 20 cent stop thing is not going to work for something like this. You're going to have a wide stop all the way down here, and it's a lot, but you're going to get in here. You're not going to jump in with 10,000 shares. I know it's a lot of money. Um, you're not going to jump in with a shitload of shares. You're testing this area here. And as long as it maintains this area here on my trigger, I'm okay with it. On this day over here, I'd be a little worried, But I'm not scared because it's now over the 50, which is obviously one of the biggest bullish things. If a stock trades over the 50, it's usually a very bullish thing. Um, and a lot of bigger companies will be looking for stuff like that. I do a lot of scalps also, but I do a lot of scalps with with perfect formations and with candles. That's There's a lot of things that goes on when you try to do a scalp play. I mean, obviously you have to be freaking quick with it, obviously. Like you have to have a platform that's very open to you trading fast because like I can right click and I can buy this stock right here and everything's preset already. So I right click and buy. So you have to have a platform that's gonna work with you also. That's gonna help you to scalp. The scalping if you have to open your thing up here and then type in okay, well I want, 300 shares at $102. If you got to type all this in, you can't scalp like that. It's just you're done. So you got to be able to scalp quicker, or if you're trying to scalp and you don't have such resources to do them quicker, then you got to use patterns, formations, and areas where you want to hold as supports and stuff. So like if you were trying to say, okay, well I want to play this as a scalp. I mean, obviously, well this is a big stock, but it's the same premise. So you want to scalp this, you would say, okay, well this here, once it broke that high, boom, right here, once it broke that high, that's now become your entry level for your support. So if you were scalping, you jump in here. You would jump in here. You would not have a stop on a scalp. You're trying to be more like in and out. So you're just gonna click it here. Buy a lot of scalps would be like a market order, but for me, I would have had a limit order on my line, and I would have obviously missed this entire trade because sometimes I just get a little greedy on that. But if you were scalping, you'd jump in this area here, and then you'd be out quick. You'd probably get out here, and obviously not play all the way here. But all scalps end up, even though you're scalping something, sometimes you gotta just look at it for a second and sit back for a second. Obviously, if you have the move already and now you're above whatever, if you want to just take a second and look at it, put a quick stop right in the money. Put a quick stop in the money while you take 2 seconds and look at the trade, because sometimes it could be the breakout of a lifetime. Sometimes it could be a parabolic setting up right before your eyes, and you just happen to freaking get in over here. And just even though you're scalping, take like half a second, real quick, set a stop in the money and look at the trade for a second, draw some channels, do something, and see maybe a scalp can turn into a trade of a lifetime for you. I've had that a couple times where I played off my scanner on a volume pop or off of a flag formation or something. Like I've played stuff where I got in something over here for no reason. Like that day when I jumped into the room with what was that, LC was it? I can't even remember. I came in for like 10 minutes. Um this move right here. Okay. Let's see. It was this move, right? Yeah. I got in at what was it? 30? Was it? I think I got in at 30. Yeah. Okay, 1430 and it popped over here. Okay, so this when I came in here, my scanners picked up this volume bar here. This one right here, this little one before. And I played this little thing based off, I can't remember exactly what I charted that day, but it was based off one of these lines here. And that's probably right at 30. Yeah, was at 20. So I got in here based off the fact that it was above the trend line, and then the shit just went pop right there. So I walked into the room. I got here at 14:30 or something. and then boom, it just went. I mean, so you walk in sometimes, and a little scalp trade, which was just for me was just get my feet wet and talk to you guys and hang out for a little bit. For me, it just ended up being a big move. And so that was kind of cool. So always when you play a little scalp play, just take a second look at it. A scalp could turn out to be a wicked play. How do I deal with the risk of it pulling quickly? Um, on a big once you decide that you want to start scalping stuff with big size, you have to already have passed the whole discipline strategy era of your trading career. Because scalping is cool. That's fine. That's fun and games and whatever. Scalping with big size is a whole different beast, and you better be sure that you're up for something instead of going this way, you're up for something going this way. So once you start scalping, say you jumped in here with 100 shares, okay, fine, you can risk a stupid pull by mistake, and you can risk a little thing. Say you went in with 10,000 shares over here, then you got to be willing to risk something. I mean, and that's part of your discipline. You better have your discipline down pack before you start scalping with size. So that's not even something that I would even that's not something I would even recommend for a new trader or for a trader with a with an account that can be blown up easily, or you can't just jump in with any trades too with huge size. You got to make sure that it has volume enough to sell back your shares that you want to buy. You have to make sure that it has that volatility to get you that 10-cent pop that you want if you want to do size. Scalp trading is it's costly. It can pop either way real quick on you. So just be careful with that. I wouldn't recommend doing it, all the time. You can't say like, okay, like this sort of stuff would work all the time. I actually got a decent size over here in this area, and so my little scalp just worked out perfect. But that was it luck? I don't know. It's just, I drew this line. I remember drawing a line up on this area. I'm not sure if it's the exact same point now. But I remember drawing a line on this chart, and I saw when it broke out, and that this little volume is when I got my alert on my scanner, and I just got in. I was thinking more like a 10, 15 cent move, and then this shit happened. And I was like, what? So yeah. It is scary. Yeah, don't. It's scalping stuff is like playing an IPO. You gotta know what you're doing. You can't just jump in and pray that it's gonna go up, because that shit'll pull on you, a lot, and you won't even know how you're down $4,000 or $5,000. So you don't want to get involved in that unless you're ready for it. Yeah, UVX I was rocking today. Yeah, stock was up really high, but as if you're following your general market when you're playing UVXY, right? So this drop here was because it doesn't trade. It's a different thing. This drop here is not gonna be this pop here. It works different. It's this drop here is gonna be this pop here because this doesn't trade like that. So when you see this here, it's actually here. So how I trade UVX1, you guys know I love this one, but this is here. So this bump here is this curl here. So it's on two different time frames kind of. And a lot of people get tricked up on that because you're seeing this huge drop as soon as the market opens, but it was already priced in over here. So it's not here. It's already priced in here. So a lot of people see this going down. They're like, okay, well I'm going long. I'm going long, and you're like, okay, why is UVXY still going down? Because it was already priced in here, dum dum. Alright, so just be careful with UVXY, and just if you wanna play it like that, any of the ETF stuff, just make sure you have something that you're looking at as a mirror trade. So like for me, when I trade my JDST or whatever, I'm looking at gold, and I'm looking at obviously like GDX, GDXJ, gold stuff. So you have to have something that you're looking at also. So be careful with the ETF stuff because it can rip on you quick. I think today they had minutes. I'm not sure if they did or not. But you have to be careful with stuff like that. And just like right now, with the markets being that it is right now, you got to be careful also. I put this back. Oh mother. Okay. See, I fix this shit. Okay. So, anyways, yeah, that's where I'm at. Shorts. Yeah, that's like a whole different other lesson. But sure, going short and going long is the same thing. A lot of people would say going short is easier than going long, but then that's a whole different topic. That's like a book right there. Going short. Yeah, I never traded short too until like not recently, but relatively recently. I mean, like I remember my first shorts. I remember the first day doing it. I was like, I didn't even know which buttons to click. I just kind of figured it out. My first short, I was like, how do you buy something high and sell it low and make money? It just wasn't. I couldn't figure it out, and then I just did it one day with I think honestly I think I did it with like 10 shares just to see what it was like, and I made like 70 cents. I mean, like seriously, it was bullshit, and it cost me more money to try it than I made, but it helped me to see how it worked. All right, so that's pretty much it. We went over some of that psychology stuff, a lot of the entries, exits, and how to play them off the trends, off the flags. Um, so my most important thing for you guys is just get a strategy and stick with it. Um, stick with the strategy, and you'll have 1 or 2 days where your strategy doesn't work, but you gotta, as long as it's a strategy that's proven, it's gonna work. So you just stick with it. Play smaller sizes if you're having bad days. Play smaller sizes if you're losing your confidence. Play smaller sizes if you're trying to build your confidence. Don't try to make money as soon as you start trading. Try to build your confidence and um, build your self-esteem, just get yourself ready for when you start putting in the 1,000 shares or 5,000 share trades. So get yourself ready for that. But before you do, you have to you have to get get confidence in yourself. And for that, you're gonna need a strategy. And then with your strategy, you're gonna need discipline. And once you put those two together, you're gonna build your confidence. And when you build your confidence, you're gonna build your account. But before you do any of that, you gotta have certain things in place. And that way you limit your risk. There's a lot of things where you can also do to you can mitigate a lot of your risk by experimenting with different things, like experimenting with smaller shares with different stops to see, okay, well, I should have had a stop here. Why did I have a stop there? You know what I'm saying? So like say you buy something at $10 and you want to actually have a stop at 985, but you see that the low of the day was at 982. So now you're saying, well, I want to only risk 15 cents, but I really technically should be risking down to the 82 or lower. So you play a smaller share size and you test these theories to see, okay, well, you know what? Well, maybe I gotta give things a little bit more. Maybe I gotta have a little bit more balls. Maybe I can, try to see what works better. You gotta find a strategy that works, and then you're gonna start being consistent with your trades. So, I hope this stuff was helpful for you guys. I'm really trying my best to get back in chat with you guys. I really miss trading with all of you. And again, for whoever's new here and doesn't know me, I'm Barry. I'm a moderator at awesomecalls.com. That's where you can find me most of the times when I'm not doing construction sometimes. But yeah, I'm trying my best to get back in there with you guys so we can nail some of these trades. Any rules that you have that you make sure not to break. Yeah, my holy shit stops. Those are not broken. That's the most risk that I take on any trade. I don't care. And I have a lot of rules actually. I have a lot of rules with how much shares I would take, how much money I want to lose for the day. I have one rule where if I lose three trades in a row, three consecutive trades in a row, I just shut it down for the day. I have a lot of rules, but it's the rules that are keeping me successful now as a trader. Before I had no rules, and I would take three, four, five red trades consistently, consecutively, and just keep going on. And um, now I have a three rule where if I take three red trades back to back to back, I'm done. I'm shutting it down. I'm out. I also have a thing where if I feel like I'm over trading, I'll just leave. I'll just say bye and I'll just leave for a while and then come back and just get myself organized. So I have a lot of rules and they're not written down anywhere or nothing. They're just mental rules that I have for myself now because you have to have a game plan. If you're gonna be, driving a car, you have to know where you're gonna go or what you want to do. And so if you want to be trading, you have to know what you want to be doing. So have a strategy and try to maximize your gains obviously, and you minimize your losses. And then once you have more greens than and less reds, then obviously you're gonna be in profit. So that's the way you try to figure it out. Like try to think of it like in a bigger picture and minimize your risk. And you're minimizing your risk because you're playing smarter formations. You're not buying high. You're not trying to follow people. You're trying to follow yourself and figure out the formations and whatnot so that you can buy as low as you can and then your risk are very low. All right. So I hope a lot of this stuff was helpful to you guys. Um, not taking my. You can only buy $20 stocks. What do you mean you can only buy $20 stocks? Like 20 and under? Not sure what you mean. Cheers. Shit, it's like an hour and a half already, man. Time really flies when you're going over stocks. I can talk this stuff all day long. Got a lot of stuff I can talk about. I mean, and it's not really so much as in a format, because I'm not a teacher by any means, but I'm just a trader like you guys, and I've been the same shit like you guys have, or not, or whatever. But I've been in the gutters. I've made a lot of money I've been a lot of money I've made a lot of money with penny stocks. I've lost a lot of money in penny stocks. I've made a lot of money just being uh, in a right trade at the right time. So okay, um, yeah, and so I've had the really good days, and then I've had the consecutive really really bad days. So I've been here with you guys. Trust me. If there's a trader that can relate to you guys, I mean, like it's me. If there's a trader that can tell you that I've been there, I've really been there. If there's a trader that can tell you that I've come from nothing, I'm here. I mean, that's me. So, and I'm at where I'm at right now because I've put everything into it. I mean, I've given my all into it, studying and looking at stuff, and now I can show you guys some stuff. Yeah, I'm not a freaking, like I don't have a master's in teaching, but this is the way that I can teach you guys. Then I'm sure a lot of you guys can relate to it because it's real pure trading, teaching. It's not like you have to buy anything or like buy a program or algo or something. It's just you and the charts and figuring out where she wants to tell you, where it wants to go, and that's it. And that's all that it is. It's you and the chart and it telling you where it wants to go. All right, so anyways, guys, thank you very much for stopping in. Hope you guys learned something. For anybody that are new here that don't know me, this is my. Let me bring this shit over. So that's my Twitter. Damn, back to 900. Somebody dropped me. Somebody didn't like the webinar. Damn it. Um, so thank you very much, guys. And I will be back in chat as soon as I can. Trust me, I'm working on it. And that's pretty much it. So that's it, guys. Have a great night. I'll message me, whatever, and we'll talk. Email me. Take care, guys. Stop.